What's up, my devil? Sensei-tutum here with another video for ya. I know it's been a minute, but I'm back from that vacation. So let's go ahead and dive back into the ES, the S&P. We'll get into some other assets in the coming weeks, coming days. But for now, I think it's time to update on this, because it so happens that we hit that funky area, exactly what I was talking about last time, where should this expectation happen, I would think that it is going to be more of a fake out than what would be the typical expectation. So this chart right here was posted again to Twitter just a couple days ago. I'm about to delete it, get rid of it forever. If you want to see it, it's on my Twitter at sensei-tutum. So again, what is my expectation? W, X, Y, X, Z, going against probable expectation for what you would think in a zigzag. Against it. Why? Why are we doing that? Well, we're going to dive into it, because there's so many things that are supporting the bullish move. We have the double zigzag to the low. We have what could be, what looks like an impulse in play off the bottom. We've discussed these things before. We'll get into them again, and why I believe still a fog of uncertainty. Still a fog of uncertainty. I believe that we will potentially, probably, just so much in the favor of probable, in my mind, make another low. So, because unfortunately, the market loves to keep you guessing. But there's lots of good trades in between, right? We don't need to know. If you're a trader, we don't need to know with high expectation at any given degree of what's going to happen. You just find the degree that has the probable expectation that you would like to see for your trade, and you take the trade there. If it's at a higher degree, you trade at a higher degree. If it's at a lower degree, you trade at a lower degree. If it's a different chart, you trade at a different chart. Now, let's get into the chart itself. Speaking of the chart and the fact... Sorry, clean up my teeth there. Old toot. Welcome back. Speaking of the chart and the fact that we're going against typical probable expectation, I think it is very important to note that the way that I teach this theory as a CWEA-M, I am qualified to teach this theory in the eyes of the Elliott Wave Institute, right? And I have been doing so for years. So, and I'll tell you, the CWEA-M, yeah, that's like you're a grad student that can be a TA. Right now, I'm college professor for you. Let's get into it. Okay, so I always preach that it's very important to know the mood, the traits, the attributes of your market. And I say those words not all to be the same, because they're all meant differently. The ES, Bitcoin, an individual stock, a commodity, a foreign exchange pair, they will have typical expectations within that market that you see that do not exist elsewhere. It's so important. I always preach this in my educational videos. You need to know your market. So, and then in different modes, are we in motive mode? Are we in corrective mode? Are we, in times of uncertainty? Are we in times of, low volume, high volume? That you'll have the different moods of that individual market where you'll need to know just a little subtle. It's just like your life partner, man, your wife, your boyfriend, your whatever. It's 2022. You need to know somebody. You need to know the market you trade. All right, let's get rid of this. And that's all of that to say that, so for that standard, what we teach, typical expectation across all markets, this does look like the low is in and we're ready to go. Now, sentiment's quite bearish, so that kind of, actually, I really don't know, but if sentiment is quite bearish, that kind of goes against the idea of being contrarian, but regardless, let's dive into it. Why I think that we could potentially be looking at a fake out. And that's what it would be, right? So it's a fake out when the market makes it look like I'm going to do one thing, but I okie doke do another. And let's talk about why I think that's a potential case. And again, just so much in the favor of this. Low could easily be in. And that's why it's going to be so important to keep updated on what this price action looks like. So let's get into it. This is gone. If you want to see it again, go to my Twitter at sensei-tutum. Okay, so we've already stated that the probable expectation on a double zigzag is much, much greater than a triple zigzag. So when you see a completed double zigzag, you almost never go, okay, I'm just going to expect a triple zigzag. Why would you expect a triple zigzag? If the double zigzag was an inadequate retracement for whatever reason, of course, it can turn into more of a sideways style of correction, and that could happen here. I don't know if that's going to be the case, where we come up and retest the highs and then come back down and test the low that this depth was set in this first wave, this double zigzag. A lot of things could happen, right? If it was an inadequate retracement. But for this case, we're going triple zigzag. And price action really does support the thesis, and this is why. So let's go ahead, and we're already going to say cut out the Elliott wave, because, not to mention the triple zigzag. Oh, if you see a move off a low, a motive wave followed by a corrective wave, and then you break out of a base channel. I got the damn recording thing over there. Sorry, I don't know if you can see that. Probably not. If you break out of the base channel, it is then considered more likely that you are in a wave 3 as opposed to a wave 3 C. For, because that means it's extending. And of course, we can throw our Fibonacci labels on here. So right to the level of a highly probable expectation for a wave 3. So Fibonacci, break of the base channel. This is important, the way you draw this, because the way it looks is that it's trapped within, but I don't think that it is. I think that it's actually gotten back out, which on the last chart you could see why that doesn't. Yeah, it's flirting with the edge, but I think it's back out, and we'll get the pitchfork back on there that was on the last chart to show you that why that doesn't excite me too much. But yeah, so we've returned to that base channel, but then come back out, which in a wave 4 you often see that the top of this base channel acts as the low for the first leg of the wave 4. So common. And then of course wave 4, again the first leg and a sideways style correction, which you would expect for a 4, although we would be expecting for alternation, which we had a sideways style pretty much in 2. So, and we're gonna get into that as well. But this thing is kind of shaping up like it could easily be a wave 4 in play, right? So just because I'm not gonna be like, well, look at this move, it's got to be an impulse. No, I'm not one of those guys, right? I understand this theory. I understand this market. Okay, so all of these things are happening to say it's bullish. Let me tell you why. Pump the brakes. And look, if you're a super bull, because of all of these things that you're seeing, I'm not telling you to change your bias. Just telling you to think about these other things. Because while I do have a primary that we will go down, like I say, it's close. Trade what looks good. All right, first of all, let's just go ahead and draw a trend line. How's that look? That looks bearish, right? Hit the trend line down. Now, we only have one test so far, although typically the more times you test it, the more likely you are to get out of it. Let's see if we get back up to test it again. Now, in a sideways style, we would probably fake it out, come back in, and then maybe we start to reassess. If we see that sideways here, right, even though we would expect to see a sharp there, which could already be finished because we have a sideways too, right? Alternation. This is basic Elliott wave. Day 1 type of shit. First page of the book almost, right? You know what I mean? In the book, it really doesn't get you that far. Stop asking me why the guidelines and rules that I'm teaching don't necessarily reflect what's in the book. They don't, I know. EWI doesn't preach what's in the book. What I teach to you is what is the most up-to-date EWI stances. Anyway, going on, we see that happen. Now, let's see. Let's just go ahead and draw a pitchfork. That one's not going to work. Okay, next thing that's obvious to what is sort of a bearish thing on this. As we're getting this expanded price action wave, what we would expect volume to be expanding for a wave 3, right? Because price should be expanded. It doesn't have to happen, but that's what your typical expectation is. Volume decreased the entire way up. And it only started to then expand when price resumed direction down. Okay, where have we seen this before? Where we had an expanded, not that long ago. Look at this thing. Look at that. Price goes zooming. What's volume doing? Oops. Right? And that hair under 1618. But again, probable expectation for a wave 3. Breaks out of the base trend channel. Finds support at the top of the base trend channel. I mean, we've seen this before, guys. We can't just blindly buy into this. And at this point, I will say, I did not necessarily buy in, but say that this is a potential turn for the market, that this could be a major turn. Here, I was not as sold. Because when you zoom back also, we'll get into another thing. We zoom out that once we've already broken this with significance, I said that we should have sustained downside price action. That was at a strong thought in my mind. So now that we did break out of this, now we're returning and even potentially testing the high here. I don't think we will. I think we've already topped, but we have returned. Let's just check divergences real quick. Oh yeah, we had a big one there. Nice big one there. So that supports this bounce. Anyway, so once we broke out of here, the way that this market works, and we typically see things, we're then expecting, for me, I'm expecting to make the high probable area for a wave 2. Now, the time when we broke out of here, I was thinking that we wouldn't get potentially back in the way price was happening. I said we would probably double the length of what we had. I still believe we'll double the length of what we've had thus far, even though we should still not quite from an Elliott wave projection expectation. I'll show that in a sec. So, where would that put us? Right in the golden corner pocket, right? If we doubled all of it. If we didn't double all of it, only doubled the leg we were expected to, right between the 50 and 618. High probable area for a wave 2. Okay? Not that we haven't completed an adequate retracement. We certainly have, especially when you have such small internal retracements on the motive wave that you're retracing. Again, I'm not a mega bear. Everybody thinks this is end of times. I think we are setting in a wave 2 for a massive bull market. Now, I think everyone's bearish at a more macro perspective than that. I don't really know. I say everyone. I don't keep track. I don't really give a hoot what other people think. Nobody. People that I respect. I do, but I don't. I don't check their opinions. I'm happy with my own. I don't feel the need to check others. But however, if I get into a conversation with somebody I respect, which there's a lot of people, just look at who I follow on Twitter, because most of those people are people I respect, and there ain't many of them that I follow. Anyway, let's see. So again, I've been expecting probable depth for a wave 2 once we broke out of this. Haven't got it yet. Now let's also go back and just look at the lower. So those are the reasons that I'm bearish still, right? That I just haven't seen. I got another thing. Hold on. Let's get in. 5 minute might be too small. Let's go 1 hour. Okay. So, and I said this in the video, and I've said this to the members and updates that, and I'm even probably on Twitter. Actually, on that last chart, again, go check me out at sensei-tutum. This, even if it doesn't measure, and I think that it will. I mean, just a hair. This is a sideways style too, right? ABC. So with this, these typically you will see them in this position before a greatly extended wave, which I would expect with this to get really a wave that's more extended than a typical wave 3, which is what 1618, when you have a zigzag that doesn't necessarily give you the oomph to get there. I would expect more extension for a wave 3. And the fact that we didn't get that, paired with the identical nature of this move, my antennas is up. So from the move from the high, this is going to be the key, right? At all times, we need to remain agile in our expectation. And again, when it's not clear at our trading degree, we simply move the trading degree or move the asset altogether. But there's a lot of clear price action on this chart. It's been great for trading of late. So right now, this appears to be an impulse in play right here, right? Now this move off the low, let's see, this is kind of a sideways looking too. Now we can go ahead and get into that 5. Oops, 3 minutes fine, but I'll do 5. This is where your boy actually normally lives for the trades. I'm gonna call this A, B, C. Gotta sneeze. Hold on. Oh boy. Is it fall? Why am I sneezing? Okay. Break out your base trend. I mean, we can go ahead and throw the fib if you know, for the girls, they like to see it. Do it for the ladies. Greatly extended wave. Could be a fake out zigzag. What's this move off the low? W. X. Y. But this is looking sideways, more like W, X, A, B, C. I think we do potentially have more upside to this, although, is that a C? 3, 3, 5. I don't know how that fits contextually. Now we're in the live. The part that's so important. What do we think of this? And spoiler alert, if you don't care to see how I analyze in real time, we're not going to know right now. There's not enough information yet. This could be a very sharp starting A wave of a sideways, like I think I potentially had mentioned, where you go up here, B, C, then you're up for the moon. We get 5 off the low on the larger degree that we're zoomed out. At that point, things change, right? We're agile. If this looks like a 4, things change. And really, it's less, let's just say if we were to say, okay, this looks like a 4, I want to long into the 5th. That trade's not the greatest. You can do it, definitely. And then once you get into the 5th, of course, when you see the end of the 5th, you can short that. Also not the best. Not bad. Certainly tradable. Depends on the context of the time for both of those trades. Now, if we do see 5 waves done, and then you get a corrective 3-wave move that we can identify the completion of, that is the best trade you can fucking get, especially if you get it right at the end. If you want to see how to do it, you just got to come on into Discord and watch me do it. Anyway, not that I don't do it on here, but I might not do it on here enough. And by might not, I don't. Oh, this could be 5 there. At this, so when we zoomed out here on the 15, 1, 2, 3, 4, 5, I mean, it doesn't really count that way internally, but it kind of looks like a potential 5-swing move. The way this truncated a little bit with the steep decline after. Again, we don't have enough information right here. If I'm trading on this degree and this goes up, down, makes a nice B, yeah, I'd trade long into that to a potential short. We're looking at the algos. Let's just see what we got in that regard. This is the pull for the algo. So we got algo short side targets here. So if you get a perfect 3-wave down, I would be careful at this level. You could look at this as a potential profit take. That's $41.99, depending on where your long is. That could be decent or not decent. Let's just say we're going to do a fib fight. Oh, and look at that. We're doing a fib fight. We got this 50. We got this 50. If you don't know how I did this pull, you're going to have to join the Discord. Look at the training video on how to do it. It's easy. 50 to 50. Fib fight. Target for this long is just above that 65 for that short. I mean, yeah, if this comes down another 3-wave move, nice divergence, I'd do that. Long into this, short out of that. Obviously, context at the time of entry is very important. Key. So there's that on this degree. But what we're going to be looking to do is to see if this does turn into a corrective move. This could be a zigzag or a sideways. If we get that sideways action, then really that's going to start to change things. If it gets up here and tests the high to come down, look to see. Not really what we expect right now, right? Because of that sideways 2 way back that I showed you. This would be the 4 for that 2 in the bull scenario that goes against us. So we would expect this to be something like this, potential C down. So even that is not going to give us, oh, look at this. It went down here. It's got to be a 3 in play. You're going to have to look and see what this would do. If this turns out to be more C than 3, I'd be very interested to potentially take the long for that 5th that we were talking about earlier. I might be losing you guys, but just trying to throw it out there, give you all the info. So on the larger degree, my perspective has not changed. On the lower degree, lots of trades to be had. You don't have to have certainty at any degree to have a trade. And just because you don't have it from right now doesn't mean in 20 minutes you won't have it. You know what I mean? Let it reveal itself. Calm down. Relax. Reminds me of a joke that I heard, and I told one of the guys I talked to that trades a lot, probably over trades. And it's a joke that's probably crude, but at this point in the video, anybody that's here really fucks with me. So the joke is, and I'm sure a lot of you guys have heard it. Put in the comments if you have. There's an old grizzled bull and a young, strong, virulent? No, that's not the word I'm looking for. Let's just say strong, sexually active young bull at the top, and an old grizzled bull at the top of a hill under a tree, relaxing in the shade, looking down on their pasture cows. And the young bull says to the old bull, "Hey, let's go down there and fuck one of those cows real fast." The old bull looks at the young bull and says, "Why don't we walk down there and fuck them all?" Okay, crude 2022. Somebody's going to cancel me, right? But that's a good, I think that's a funny joke, especially to think about in trading. Be patient, man. Look, wait for the good setup. Don't force yourself to take a trade just because there's a trade. I need to trade. I got to make this much money this week. Well, it's going to be a lot harder to make that much money this week if you take shitty fucking trades. Set yourself up for your plays. However, be as picky as you need to be for the structure of what your play template will be. Okay, if I make this my bare minimum, lowest air quote, lowest probability trade setup because I need to get so many trades, so I should see them, stick to that template, whatever it may be. Don't fucking just trade to trade. Don't rush. If you don't see it, let it come to you. Walk down there and fuck all those cows. All right, guys, toot out.